Greetings, members one and all of the Salivation Nation. We've seen gold climb up a bit in recent days, and many analysts are saying that it's time for silver prices to catch up with gold. Let's take a look and see what they say and pick it apart a bit. Let's explore. This comes to us from Kitco. All eyes are on the gold markets after prices pushed to a 2-week high at the start of the week. But some market analysts say that the precious metal to watch is silver. Silver has been a constant disappointment to investors this year. The metal has significantly underperformed within the precious metal sector as the gold to silver ratio trades near a 26-year high. However, some analysts have said that with gold on the move, it could be time for silver to shine. Both gold and silver futures are trading relatively unchanged on the day, ahead of the North American Equity Open. July silver futures first traded at $14.74 an ounce, and August gold futures last traded at $1,328.30 an ounce. And here we see silver's chart here. In a recent interview with Kitco News, Bill Baruch, president of Blue Lines Futures, said that he is watching silver closely to see if the rally in gold can transform into a sustainable bull market. He added that silver's recent bounce off from 6 months' lows is breathing new life into the precious metal. I think there is some real potential for silver, he said. Silver needs to join this party and bring staying power to gold's rally. Ole Hansen, head of commodity strategy at Saxo Bank, said that there were some good reasons why silver has suffered more than gold. He explained that growing global recession fears have weighed on silver's industrial demand, which takes up nearly half of silver's supply. Further bolstering, by the way, what I've been saying for quite some time, that silver serves as a duality metal, with half of it being industrial demand. And that's having a huge weigh in on the price supply and also the price there. During the February to May sell-off, silver dropped twice as much as gold, and only during the past couple of days it has shown signs of life after breaking the downtrend from the February high, he said. And again, that goes to tell you that, see, gold is treasured. And some people will make the argument that because gold is treasured, that's why, and silver is being utilized and consumed, they say, that the price should be higher. But I think it's exactly the opposite. That's why gold is higher in price, because it is so treasured. And by the way, it's much rarer than silver. Hansen explained that because of the current market environment, speculative fund managers have always been actively selling the metal. The latest trade data from the Commodities Futures Trading Commission shows that the precious metal speculative net short positioning is at its highest level since November. However, Hansen said that the sell-off is overdone and that the short sellers are unprepared for higher prices in silver. A continued gold rally from here could, on that basis, attract short covering in silver, which may trigger an outperformance despite the mentioned headwinds. So that's interesting. That's probably the most convincing argument that I've seen that could cause the price of silver to follow gold. Maybe not to the ratios that some of us feel they should be, the gold to silver ratio, but at least on the tail end of gold. But again, that's in the paper markets. That's in electronic markets. Looking at the gold market, Hansen said that the prices could consolidate above $1,300 an ounce, but if the market can hold support at $1,316, he sees a possibility of prices retesting February highs of around $1,350 an ounce. Helping to support the yellow metal is a growing market pressure for the Federal Reserve to cut interest rates. The CME FedWatch tool is now pricing in 3 rate cuts by the end of the year. Wow. So that's interesting. And by the way, the Federal Reserve has been saying, Chairman Powell made a statement earlier today that they are keeping an eye on what's going on with trade, and that will affect the market's decisions. We'll see how it goes. But it's amazing that this tool is pricing in 3 rate cuts by the end of the year. That could mean that there's a fear of a recession coming. We'll see how it plays out. With the FOMC moving towards a cutting mode, recession risk on the rise, and a trade deal still nowhere near to being agreed, this is the time for gold to show what metal is made of. And based off some of the comments here earlier and the theories, that could translate over into silver. It's going to be an interesting ride to see where the things go. I believe, as I've been saying, that silver is it's got to be close to the bottom. If it's not at the bottom now, it's got to be close to the bottom. I know we did see it go below 14 for a time. I guess that floor could be tested again, but every time it moves lower, it gives you the speculation that it's probably at near or could be flirting with near production costs, at least for the primary silver mines, which are struggling right now. But being as silver is a byproduct of other metals, I think it's got a lot of flexibility, a lot of room to move downward, at least for those other mines. Now, if it does stay this low for too long, the primary silver miners are going to really struggle, in my view. But it could stay at this position for quite some time and be a delayed reaction, even with what's being said here, considering the industrial demand for silver. So it may be a while before some of this does happen. And it doesn't mean that it will happen either, by the way. Let me make that clear. Just because it's time for silver prices to play catch-up does not necessarily play catch-up with gold does not necessarily mean it's going to happen right away. As you can see here is gold. It's down $1.30 as of the recording of this video, but well above that $1,300 level. And silver is struggling, but it is above. Obviously, it's 14 and 3/4, $14.74. It was trading very close to $14 for quite a while. Even platinum is up from prior. It's up well above $800 now, and palladium is starting to really make some gains here as well. But look, palladium and gold are almost at parity with each one another. Palladium at 1324 and gold at 1323.50. That's interesting. Gold could become king again, at least of these metals. What's not shown here is rhodium in this particular chart, but rhodium is a very fringe precious metal, very rare, and has limited applications, mostly in the jewelry sector. But it is interesting. It is fascinating. And we'll see how things go. And one thing about this is, yes, we see the prices go down. I think it's a good time to buy silver. But no matter how low silver goes, and no matter how wide that ratio goes, I always encourage my viewers to pick up some gold as well, to diversify. Because, as I mentioned before, gold is the ultimate, I believe, preservation of wealth. It is the ultimate safe haven. Whereas silver is a safe haven, but there are times when it doesn't serve that role. It goes a little bit out of line with the rate of inflation, which is to be expected considering its roles and uses. There are times when it goes above the value based off of the rate of inflation, and then there are times, more often by the way, where it is below the rate of inflation, the value of the rate of inflation. And that's the thing that people need to think about when buying silver, which is why I'm so adamant about not calling it an investment, or even gold really as an investment. I see them as savings. It's a way to protect yourself against economic instability. Notice I didn't use the word recession there, because economic instability can also mean deflation. And that can be just as harmful. In fact, some theorists, economic theories, say that before there's a big downturn, there could be a period of deflation before a massive inflation. In fact, some may make the argument that we're in that mode with commodities right now. But nonetheless, accumulating these metals is a way to protect us. They've been used as money for thousands of years. And even though right now neither metal is used as a currency, and probably won't be again, barring some SHTF scenario, we can bet our bottom ounces of gold and silver that gold and silver will remain money. I would like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share, comment, and subscribe.